Hello friends, this is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis show where we look at how the market performed today and then how we can plan for a better trade tomorrow. If you're not subscribed, subscribe and consider sharing to others so that everyone benefits, and we have very few subscriptions. Need your help. Thank you so much. So what did we have today in the markets? It was a down move that was paused, right? It closed green on Nifty, but BANKNIFTY is indecisive kind of. So will it receive? Let's look at the markets on the charts and the slides and then try to find an answer to that. So pre-market analysis for November 26, Friday, tomorrow. That's how do we analyze that? All of these parameters that you see on the left side can be seen. We're looking at them in the charts, and we will also have an addition that analysis on all of the parameters that you see on the right side. So price pattern is very simple today, not much complications, right? It is a green candle. You can see that it is a wide range green candle on Nifty and an indecisive dodgy that is seen on the it is a monthly expiry for the November series, and the Nifty closed green with 100 points, 120 points up, and then BANKNIFTY was indecisive, lost slightly 70 points. So dodgy. Now, intraday, what if you read, this is what happened. Nifty, it was trending up after a slide, right? And the trending up movement close at 120. BANKNIFTY, it was trending up, but the volatility was huge and it was very weak. And both of them met with the resistance. If you see the lower time frames, RSI momentum, if you see, both met resistance. Bollinger Bands looks like this. You already know it is expanded downside, but somehow it is arrested. The down moves are arrested, right? Although the expansion has happened to the downside, BANKNIFTY also down moves arrested since last 2 days, right? It is even more than this. So Bollinger Bands expansion has happened. The width between the central band and the lower and upper bands big. So volatile movements. So it's even bigger than BANKNIFTY. So very choppy volatile movements coming because of that. Support resistance zones you can see in this chart. Left Nifty, right BANKNIFTY. And the Nifty, you can see that the support right now, it is for the first support would be the 17,350 level, and above that, because I have this next support at 17,250, 200 to 300, that range where it took bounce earlier. And if that goes, it's 17,000 and 7,150, that range. If that goes, then 1,600 Fibonacci retracement zone. If that goes 16,700 to 16,750, that is coming to 100 DMA. And upside resistance you have, again you have the 17,600 area where it fall off from earlier. So all the support zones earlier would be no resistance. Upside 7,800 would be another one. Then above we have 17,950, 18,000 and 18,100. 8,200 and 8,400, 8,600 all resistance upside. Back to the right side, if you see the first support where it is taking a bounce today also can be seen as 37,000 range, and then we have downside of 36,500 range levels zone, and then you have 35,900 to 35,600 to 35,900 that range, and then that goes and you have 35,000 to 35,300 zones downside. Upside resistance first is 37,700, 800 as we take on, then 38,000 rounding number, that range, and then 38,500 range, and 39,000 range, and then 38,500 range, and then 40,000, and 41,000, and 40 near to 42,000. These are all the upside resistances. So the immediate support downside, we already mentioned that it is 37 right now, this zone, and then if that goes, we have 36,800, so it is also a previous swing low. So most of them are previous swing lows or previous support zones from where it fall off. All of this resistances, that's a support and resistance. Making out of these levels, what you need to know them is you can trade your stop loss, or you can set your stop losses for potential longs or shorts based on what are the when is the breach of these things. So breakout or breakdown happens at from this level, so very critical. These levels are derived primarily by previous resistance, previous swing lows, Fibonacci retracement levels, right? So that is how it is primarily derived at. So Bollinger Bands we already seen. Momentum divergence, we talked about momentum bullish divergence on Nifty, and it worked out perfectly and it met the target also, and Nifty moved from bearish zones to sideways zones today, right? Bank Nifty, there is no divergences that is seen, but momentum, just like Nifty, it's in the bear zones. Nifty has moved sideways from the bear zones. Bank Nifty still in the bear zones. Trend indicator ADX and DMI plus and minus shows that the DMI minus is still dominating for both the indices, left Bank Nifty and right left Nifty and right Bank Nifty. And you can see the strength of that bearishness is increasing because the trend ADX green one is moving higher, but the trend of the bearishness has slightly bent on the Bank Nifty. And on the week time frame, the trend indicators are at the DMIs are about to cross over, but not really crossed over. So medium term still bullish, you can see. Short term still bearish with the strength increasing. So that's about momentum and the trend, and then now we have volatility. It dipped 2.5% and settled 6.6. Yesterday we saw that the market also fall and Nifty also, and the India VIX also fall. So we assumed that it may not be real, and exactly that's what happened. Market moved up, but today it is the right trend. Market moved up and then VIX fall down, which is okay. Anyway, 15-19 range is being maintained, right? And so it keep on hovering in this range for volatility. Open analysis. This is for the next expiry of December 2nd. So it may not be fully valid because today was an expiry, monthly expiry. So the active trading on the open interest data will be more valid from tomorrow onwards. Right? But we'll just look at the data, what it shows as of now. Right now you can see that Nifty 70,500 and 7,400 maximum put writing, and 18,000 and 7,500 as maximum call writing, and 1.02 put call ratio, and it is a long weighted up in futures. Bank Nifty 37,000 and 36,000 is maximum call writing, and the rest of the CN is 40,000 and 37,500, and the put call ratio is also not bearish 0.74, and but it was a short build up which happened in the futures of business data as well. So this is what happened actually today. This is a heat map from the extra. So it shows that the Reliance was the major contributor and HDFC Bank was first or small moves. DB is large also more. So major contribution of 6% was from the Reliance HDFC. Sectoral performance, you see, IT closed 1% up, but more short-term momentum is sideways. So you got to wait for longs till the moment of catch up. Metal 0.5% up, but momentum is still sideways, so wait. Auto closed red in spite of the rally, 0.5% down for some reason, and the short-term momentum is sideways, so still got to wait. Pharma goes green 1.2%, but short-term momentum is still sideways. FMG goes slightly green and hammer bounce, but the momentum is still sideways, so got to wait. Reality goes green 2% up, but momentum is sideways. So all the sectors have shown some bullish movements, some reversal except for auto. Most of them went up, but the momentum of that is lost because of the multiple days down. So that has to catch up so we can go along with this idea. Interest reward special again disappointing. Fyers selling continues with 25,000 crore for November also. Last month, October also 25,000 crore sold. So November still there are many days. But today 2,300 crores of selling happened, but Fyers are buying 1,300 crores of buying happened from the domestic institutions. And dollar index, you can see that it is shooting up, but today there is some red, some pause or consolidation is seen here, and currency pair USD is also showing some bearishness. So this will be a trend. Then today slightly, gold has dipped, right? Crude oil is cooled off and it is consolidating. It has been cooling off since several days, and it has consolidated at a support zone, which is good. Dollar, when the dollar increased, Vauld dipped, and you can see it is consolidating the previous support zone. Vauld also is at the support zone. Overall, SGX is moved a little higher, and Dow Jones, you can see that as of now there is no major up move. Big moves are not seen, so should believe only big moves in the foreign market before it judges them on the Indian market. Otherwise, it cannot work out as you expect. But you have to see it tomorrow before the pre-market before you make a judgment. Actionables, you can see this is two stocks, Apollo Hospital and then Toronto. Apollo Hospital is showing bullishness. There is a divergence here, bullish, reverse divergence actually. And look at the volume is good, trend is good, momentum is great, divergence and green long white race candle, and there is definitely much up more can be expected from this. Toronto also is a channel. You have to wait for this retracement from this channel top before you make an entry on the daily. Momentum is good, volume is good, and trend also is good. So that's fine. So overall, a mild bearish and neutral, is my view on the short term. Reasons: bearish chart patterns, momentum drop, and the trend also drop. All are in the bearish zones. Nifty trend is like momentum is slightly moved to the sideways, but all charts are weak. Banks are not supporting today. Institutional selling continues even today to the upside. So index there is support zone, there are previous swing low, there is a bounce that happened, 7% correction had happened. Now these are all the reasons why it is still neutral, or it is still only mild bearish and fully bearish. Right? So that's my view. It's not a recommendation, it's just my view. You can analyze all of these parameters that we analyze and then come to your own conclusions, right? So volatile range today dipped, and so it is confirmation that it is moving between 15 and 19. It is very choppy, as you can see, V-shaped moves and big swing lows and swing highs are happening. So that is Bollinger Bands also say the same. So always play with counter spreads and counters and flies, right, and vertical spread strategies so that your risk is defined always. So that is the repetition of the volatility in the option trading suggestion that I make every day. I hope this helps you to understand what happened in the market today, what happened in the global markets in various aspects, and then it would help you to come out with a good treatment for tomorrow. If it helps you, consider the like button and then share with your friends, colleagues. Thank you so much. Happy trading, happy learning. Bye.